Hey guys, if you're transacting in the commercial multifamily space, now is the time to focus on your relationship with your mortgage broker more than ever.
Yeah, as you know, correspondent status has changed, and there are a few things that are going to change the dynamic of how your relationship with your broker, the type of debt you're going to get works. Watch this video. Hey guys, Josh and Aaron back for another Finance Friday episode. And in today's episode, we're going to talk about something that has fundamentally changed the insured debt markets. We're talking about the change in correspondent status. For many of you who are outside of the industry, it doesn't really mean a lot. But if you're working inside the industry or you're looking to take on an insured mortgage, this does affect you. And there's a lot of questions around what that looks like. How does it affect you? How is it going to affect my broker relationship? So in today's video, we want to discuss everything there is to know about that new change happening on September 1st, what you need to know, and how we're going to be able to help you.
Yeah, previously how it worked was if you were a mortgage brokerage and you had direct correspondence with CMHC, you could go and shop the COI. So you could send the file directly to CMHC, get the COI, then take that to your lender pool, have them price it out, and then give the best rate to your client. Now, as of September 5th, I believe it is, that direct submission is gone. So brokerages across the board, ICI, CMLS, any of these other larger brokerages that you might have worked with, smaller brokerages, no one is now able to send the file directly to CMHC to get the COI for the purposes of shopping that deal. So really what we're seeing here is, the loss of shopping, the loss of the ability to take a file to a few different lenders, compete on the rate and on the cost, and trying to find the client, essentially the best deal. It's the switch here is now moving to directly with relationships with the lenders, and just hopes that the broker that you're working with has a good enough relationship with that lender to be able to give you the best cost, or at least they have certain relationships with lenders and they know who to send the deal to, and relying on those relationships to be able to get you the best price instead of having a few different quotes and offers from the lenders.
Yeah, it fundamentally changes how a broker is going to do their job, but as well as the options that the leverage that a borrower has. As a broker, you could take that COI and shop it, and you could get sharper pricing as you go up with a really good file against other lenders. And unfortunately, right now, what's going to have to happen is the shopping of the high level pricing, or the letter of intent, is going to have to happen first. But that's pre-credit. That's pre going through all these different levels of oversight to give you true pricing on a deal. So, at the end of the day, as you said, the communication and relationship with your broker to these other lenders is going to be the most paramount thing that a borrower and a broker can have in this market. And I don't really see them flip-flopping in the foreseeable future. I guess some of the challenges and the reasons why CMHC said this actually is happening is due to overall just quality of mortgage submissions directly to CMHC. If anybody knows, the processing time right now, and historically, has been atrocious. It's not great. You're looking at sometimes 4 to 6 months to be able to submit a file. And what they're trying to do is expedite that process. So they're saying that all of the CMHC submissions from the correspondence, the quality of these applications weren't as what they would expect from a lender broker. So, they are switching the submission process from the brokers now back to the lenders, and making the lenders responsible for the quality of application coming in. And what they should do is expedite the process and hopefully create faster lead times.
Yeah, I would like to see CMHC bring back the correspondence. I think you have to, at some point, once you figure out how to better monitor and control the applications, whether there's a more rigorous approval process. You take a look at the process for a lender to become a correspondent or CMHC approved. The wait time is maybe months, maybe even a year, depending on the process. Whereas from the broker side, it was, you found a lender that was willing to sponsor you, and if your relationship was great, you can be approved within a couple of weeks. So the difficulty level there, obviously not what an industry standard should be to be able to have someone approved for that type of debt. facility. I think you have to bring it back just to keep the market competitive. I think also just keeping the timelines competitive as well too. When you relieve or you take away these additional options for brokers to take on the due diligence and the submission and push everything onto the lenders, you're going to create a spike in those timelines. Lenders are going to have to bring on additional underwriters, maybe take on larger office space. Does that force the lenders to add a bit of a premium on the rates just to be able to offset the cost of having to go and hire these additional support staff? We don't know. I mean, we'll see whether or not that's going to have any effect on the pricing or on lender fees or anything like that. It's just additional servicing type fees. But it's also potentially going to remove some of these smaller lenders that are really crucial to like what's going on right now, the missing middle finance. If you take a look at the two or the biggest major lender that's playing in this like sub $5 million space, which is Desjardins, they currently don't have a CMHC submission team. So, Desjardins relied on a broker going out and getting a COI and bringing that COI to them for them to price out. If we don't have that broker correspondence and, you can't have a COI being brought to Desjardins, it's either going to force them to, remove themselves from the time being from the CMHC debt, or it's going to force them to go out and put together a team. And, same with Meridian. We know Meridian's bringing in a CMHC product coming fall, end of 2024. But again, we're not quite sure as to whether or not they're going to have that CMHC submission team there with the due diligence to go get a COI. And again, if you're removing, two of these small lenders that are lending on these smaller construction loans, that's going to have a huge impact on this, this middle-sized financing as well.
Yeah, without a doubt. I mean, financing that middle-sized sub $10 million either construction loan or even term debt, it's challenging right now. There are a handful of lenders who have different requirements when it comes to equity positions in properties, what kind of deals they'll finance, the requirements and personal covenants from the actual borrowers themselves. So when you start to take away the insured options, because as you said, the infrastructure isn't there on these credit unions who have the capital but don't have the ability to manage that COI issuance, it doesn't help the mid-size or small-size investor, which unfortunately I think that is going to be where a lot of the need for these products truly are. Obviously, the big guys, they get their capital allocated to them at the start of the year. RBC sits down and says, okay, well, Tridel and everybody else, you guys get your hundreds of millions of dollars. But, when you're looking to get into, becoming that mid-sized developer, the financing options available are so limited that unfortunately this policy rate decision might not have had the foresight to really understand or understand the ramifications of what's actually going to happen with this mid-sized developer.
Yeah, I mean, if we take a look at policy changes from CMHC in the last 12 months, it doesn't tend to look like they sit down and really think it through all the way. And, what is the true outcome here going to be? Or, in the case of the private debt and the payout in the 24 months on title, like they brought that in and then 6 months later, they're like, okay, we're actually going to pay out anybody. It doesn't really matter how long they've been on there. It doesn't matter whether it's CMHC approved debt, and how many applications were postponed or canceled or were kicked out of the queue because, they bought a property in 2020 or 2021 with unapproved CMHC lender debt, which, this policy wasn't in place then, and they had a program in place or a project in place, and the plan ended up getting changed halfway through. So, it in my opinion, they don't always, to me, it doesn't seem like they fully think all these things through all the way. It seems to be more of a, just kind of like a bit of a margin of time for them to be able to sit down and figure out how to do it. And then they bring in some sort of change. And hopefully that's what they're doing here. Hopefully in 6 to 8 months, we have broker correspondence back and we're able to, go back to getting the COIs and submitting them to the lenders and just being able to provide, a more competitive space for the borrowers.
Yeah, I mean, it's really interesting when you start to think about the dynamic of how debt was shopped initially before, like as of right now, but after September 1st, it's going to change that. So, historically what would happen is a broker would go and get the certificate of insurance and then use the relationships with different lenders and you'd grind down the actual cost of that debt. But now that relationship table is flipped and, all the volume and all those relationships have to get pushed through a handful of these lenders. And for anybody who's listening right now, like there isn't 100 of these lenders out there. The the pool of people who play in this space and lenders who play in this space are very small. You maybe have 6 major players other than the big 5 banks, and each one of them have different loan size requirements. Some of them have more stringent underwriting requirements. Some are more apt to doing certain types of deals than others. So, it's going to be interesting to watch, these tens of billions of dollars that was happening, that was being transacted or negotiated in the outside markets with all these other lenders to get now pushed through these lenders. It's fundamentally going to change the way, insured debt is taken and shopped. And I know I'll echo what you said previously, is just like the relationships that your brokers are going to have moving forward are going to be the single most important thing. So it's almost like pushing the newer guys or the newer brokers. It's going to create a barrier for these people to enter the market, because people are only going to want to work with people who have the pre-existing relationships in place to get the best type of financing on the onset.
Yeah. And, like Canada isn't the States. We don't have 4,800 different, lender options that you can go to. It's already, a restricted enough submission process, like you said, like certain lenders with loan sizes, certain lenders with, different projects, different parameters. Like it's already tough enough to be able to have a different variety of lenders that are going to be competitive on different things. So to do this and to really just pigeonhole, files going directly to a lender and only being able to go from there, like you're really reducing the already reduced competitive market in Canada. It's tough enough as it is. So I think, as a short-term solution to be able to prevent, fraudulent or mismanaged or poorly put together files, sure, I can understand where they're coming from, but I think from a long-term perspective, it doesn't make sense to truly take away the correspondent market. I think you have to be able to give that flexibility and be able to have, a sense of variability in your ability to submit applications and price it out. And 5 lenders are going to be more competitive, especially with all the conversation, we need housing, things are being built quick enough, rental market challenges, like stuff like that. We keep getting the rhetoric of we need more of this, but the actions that are being taken are always seem to be more of a red tape type action than, cutting the tape in general.
No, I completely agree. I mean, the competition, it's almost like an oligopoly almost. I mean, not quite, but like it's getting so siloed to these are the only options that you're going to have available in this country to be able to take on this type of debt. And I know Aaron and I had the pleasure of meeting Pierre Poilievre, and Aaron quickly just brought up the fact that there is no secondary insurance option in Canada for commercial mortgages. So if anybody here is listening and has, an ear to somebody who maybe deals with policy decisions, like, having an additional option in Canada to be able to have somebody go in and shop that debt, I think it would make it, it would open up the market. It would allow a lot like the residential side. We have multiple different insurers. We should have that for commercial financing. It would allow for processes to get better. I can guarantee you that if there's competition in the market, CMHC wait times go down to minimal. You're able to have turnaround. You're able to get things approved quicker. I think there's going to be more clarity out. Having more competition is always better in a free and open market. So, hopefully cross our fingers that happens at some point.
Yeah, absolutely.
But I mean, realistically, CMHC is the backbone of the Canadian economy, keeping up the commercial debt structure that we have today.
And it's already a fragile enough system with bonds and allocations and how tight, the yields can be with expenditures and allocation from government debt. Like it's, the system is, it's not a strong structure right now. It's pretty rigid.
No, completely agree. So, I mean, if anybody's listening right now, the moral of the story here is the new changes with the correspondent status don't affect your ability to be able to use a broker to purchase or refinance your debt. If anything, choosing a good broker is going to be the main differentiating factor at this point. So if you do have any questions about your submission, the process, how long it takes, what lenders you should use, just getting pricing ahead of time on your deals, feel free to reach out to Aaron and myself at Bill Financial. We're happy to help you whatever you need.